and gentlemen, on behalf of Bombay Chamber of Commerce and Industry, I, Priya Singh, would like to extend a warm welcome to one and all on today's panel discussion on tariffs, trade, and India's economic future. I request Mr. Sandeep Khosla, Director General, Bombay Chamber, to please deliver the welcome address. Round of applause for our DG.
Thank you, Priya, for that warm welcome to me. Welcome, dear members, for an exciting evening where we'll hear from the experts on what is ongoing and what is right now a very, very hot topic. I think every day morning, most of us get up, watch the news as to what is the latest development. So there are two issues which are dominating as far as coming from the US is concerned. One is on the visas. So everyone who's got their children or their relatives' children, they are very anxiously looking at what is the visa situation, and others on tariffs. I mean, we're not discussing visas here today, but all welcome to come to us whenever you want a visa for any country, a business visa. Bombay Chamber issues a letter to its members. But as far as this is concerned, we thought we will get experts from each of these industries which are affected right now with the tariffs. I know today is an announcement from the Government of India Chief Economist, which says that by November this will be something which would be taken care of or sorted out by then. If you open the news right now, it says that Mr. Trump just had a call with the first call after a long time in the tariffs with Xi. So, every minute is a new one. We thought of doing this for the last 3 months. Every time we thought that we'll put up a panel, something or the other came up. And then we thought that this is stable now, the 50% for some time. So let's do it now before it changes, because it kept on going up and down, and there was no point in doing something where the next morning it changes completely. Let me also give you a background of the Bombay Chamber. We're the oldest chamber in the country. In the next 2 months, that is in November, exactly 2 months from now, on 19th of November, we'll be celebrating our 190th Foundation Day, 190. We've been at the forefront of driving all change, informing our members, hand-holding. I mean, 50, 70, 100 years back, everything depended on, the industry was depending completely on chambers. Today, we reach the stage where a lot of large companies don't need any chamber. Simple example is for the Tatas to acquire Jaguar, they did not need any chamber. Right? They could directly go and do whatever business was needed. But the MSMEs still need a lot of hand-holding and support. So Bombay Chamber helps them. In fact, today morning, we had a wonderful session on for MSMEs, where we discussed various aspects, including how the trade could increase there. We had 4 countries which came and presented. 3 countries today, Spain, Ecuador, and South Africa, which presented opportunities in their countries for MSMEs. So we do this thrice a year for MSMEs, where we get 3 to 4 countries to speak to them about opportunities in their countries. Also, a lot of financial institutions to help them. Afternoon, we had something on CSR, where we again had select panels and of how CSR is evolving and how this has become completely mandatory with, how each and every rupee is now going to be counted as to whether it is reaching the right audience for what it was meant, due diligence in large companies. And we're ending the day with tariffs, which like I said, is a very, very hot topic. And I'm sure it will be very, very interesting for each one of you present here today. So with that, I hand it back to Priya. And once again, thank you all for coming here, and I hope you have a wonderful evening listening to what we can expect in the coming days. Thank you.
Thank you, Mr. Khosla. Let's proceed with our panel discussion for the evening. This is on the topic, Implications of Tariffs on Sectors. And I invite our moderator, Mr. Srinivasan, Co-Chairperson MSME Foreign, Bombay Chamber, and Director, AIRA Consulting Private Limited, and panelist, Mr. Shaunak Parikh, Director Mahendra Brothers Group of Companies and Vice Chairman Gems and Jewelry Export Promotion Council. Mr. Samir Bhuta, Member Apparel Export Promotion Council and Partner Shreeji Exim Work LLP, who is joining us virtually. Ms. Elizabeth, Master Associate Director Crisil Intelligence, Mr. Rajan Raje, Founder and CEO NICHEM Solution, Mr. Abhay Dandwat, Chief Risk Officer and Head Strategy National Bulk Handling Corporation, to kindly join us on the days. Round of applause for our speakers and moderator.
Is joining online. Samir Bhuta is joining. Good evening. Yeah, like Sandeep said, it's a hot topic. I hope it doesn't become a boiling topic because you don't know what's going to happen. Every day morning you get up and are exposed to a new set of news item. So there are policy issues and there are industry issues, there are sectoral issues with this. We don't know whether we should wait for a better day, and we waited for 3 months and then we said we start here. But as industry, should we wait for something to change or should we operate with this new normal? So that's the kind of question that we are going to debate today. We have some very good sectoral experts, I mean, the industries that are very well represented and who are likely to be affected by this. And of course, we have an expert who has a ringside view from Crisil, who can look at other industries and tell us how things are. We'll have this panel, and maybe last couple of minutes, I'll leave it for the floor to ask questions if panelists are okay. So, Elizabeth, let me start with you. This is the second panel that we have on tariffs since morning. Like Sandeep said, one we had on impact on MSMEs and now on large companies. So, possibly the most important topic. But the question is, why is US such a crucial market, and why is that one tariff is sort of boiling the ocean all over, kind of stuff? Why is US such a critical market in the overall scheme of things?
Sure, thanks for the question. So I think before actually we get into the details, I think it's critical to understand that, when you're talking about the impact of tariffs, I would like to mention what the CEA has stated, that there will be a 60 basis point impact on the entire growth just because of the US tariff. If we see the kind of the relief which has come in, so there is a GST reduction which has happened which is going to have some kind of the benefit for the consumption sector. But even if after considering the GST reduction as well, still the net impact is there is a 30 basis point impact that's going to be on growth. So clearly calls about the kind of impact that the tariff is going to have on the entire segment. Coming to how US is a big market and why so. So if we see the recent, and we pick up countries like maybe UK, UAE, Australia, where we have signed deals, these three countries itself will account for almost 6% of the overall merchandise global trade. But the same lens, when we put for US alone accounts for 14%. So clearly the kind of trade that is actually happening with US. Two is, if we look at even the entire composition of India's trade basket, US itself accounts for a 20% share. So all the countries barring, if you see US itself is such a key contributor. Like if we talk about IT, for instance, in IT services sector itself, 85-90% is all export, and another larger share of it is all again US, which is 50-60%. So that clearly calls out the kind of importance or the kind of impact because of the tariff that is going to play in, especially for the Indian economy.
Yeah, so that's quite interesting. Dr. Manmohan Singh famously said, it doesn't matter whether you're doing business with US or not, but it's important for the world to know that US is a friend, right? and possibly what you said sort of reiterates that it's important for the world to know that we are in business with the US. Saunak bhai, you are among the most affected. Yeah, gems and jewelry. Every day morning you get up and say, oh my God, what's happened to gems and jewelry? Our star performance, and now suddenly everything is slipping. What's your take? How is it affecting your business? And your sector possibly?
So I think I would say, firstly, we are roughly about 7% of India's export, about 30 billion. And about 1/3 of our exports directly go to US. There's more that goes indirectly as well. I would say there are actually, I'll split into 3 different ways. One is a short-term impact, which is basically, as you understand, it's a high-value, low-margin industry.
Absolutely.
And even 10, 15, 25 is just not sustainable because it's all single-digit margins that our industry works on. So short-term, surely it's a big impact.
Okay.
I would say, I think largely the industry is kind of standstill, figuring out how to really deal with it. The only thing I would say is, luckily we had some time, so there was a lot of front loading that happened. People did export to get ready for the season.
Okay.
So hence, whether it was April and then again in August, and we had time to at least export more. So that way we could partly, I would say, took care of that. But going forward, I would say it's almost impossible to actually deal with 50% tariff.
So it's going to have a major impact.
Absolutely.
It's going to have impact employment also, because gems and jewelry is a huge employment generator.
Yeah. So the second part is because of that, the impact that will have. One is the reduction of exports. Secondly, the impact that we're going to have on our workforce. We roughly employ about 5 million people within the industry. And you can only imagine with this kind of impact what would happen to the workforce.
Yeah, unfortunately, the skills are not fungible. Somebody who knows how to cut a diamond cannot go and work in a workshop.
It's a very, very specialized skill.
skill.
Most of the people that you see in our industry actually they also come from a very, I would say, fairly, not a very highly educated workforce. And most of them are trained within the industry. So it's very, very specialized skill.
So it's a skill-based, not knowledge-based industry.
Absolutely, 100%. And third, I would say, is a long-term impact as to how if it really continues the way it does, how much of the business will get really transferred to other competing countries.
So I'll come to that. I mean, that's a very important topic that we need to speak about, and maybe it will happen with you, and it will also going to happen with government. We'll need to discuss that in a little more greater detail once we have the initial comments.
So these are really the 3
Absolutely.
areas.
There are some very important and critical impacts. Samir bhai, can you hear us? Yes. Yeah. So, government is again one big export opportunity. Again, impact of 50. How big is the impact? We keep seeing news items saying that, oh, nothing is going to happen. We are Phoenix. We'll come back from the dead, kind of stuff. But tell us the real story. How things is.
Thank you for having me on the panel. As Mr. Parikh also said, I agree with him fully. There are 2 aspects of the whole game. Of course, we are about 16 billion of turnover for exports, and the core business item, which is about 4 billion, where plus another 2 billion for non-core business garment item. But the core 4 billion, which goes to people like Walmart or Kmart or the bulk
Absolutely.
So this is how right now the situation is. Wishful thinking by our CEA saying that the tariffs should go away by 2011, fingers crossed. But
Yeah.
till then, how will we survive?
Yeah, but to be fair to him, he said it is intuition, it is not based on data. So we'll hope his intuition works for this country. Yeah. Yeah. So what I hear from you, Samir bhai, is, it's not just an economic problem, it's also a socio-economic problem, right? And Tirupur, one knows, there are workers from Bengal, Orissa, Jharkhand, Bihar coming, and suddenly they are all going to be jobless. And like in what we talked about with Saunak bhai, your business also, people are skilled, they are not educated, right? They are not, the skill is not fungible. Yeah, so for example, somebody working in a chemical plant may move into some other work, but in your industry, it's not possible. So we are looking at a large problem, so to speak, from a economic standpoint of view, but more also from social point of view. Yeah, the indirect. So there is an ecosystem. Yeah, so it's a wider impact than what one thought it was going to be. Yeah.
Always remember, after agriculture, textile is the biggest
Absolutely. Employment generator. Employment generator. Absolutely. Absolutely. Yeah. 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 So one understands where you're coming from. I'll come to you, Rajan sir. He actually wears two hats. So he's two speakers rolled into one. So one is, of course, he represents the chemical industry, very innovative chemical company he runs. But he also is the chairman of the MSME committee of Bombay Chamber. So he brings in two perspectives. One is what's the impact on chemical industry. And so I'll expect you to only answer that because we discussed the MSME in the morning, so I don't want to sort of go over it all over again. But on the chemical industry, Rajan, what do you think is going to be the impact?
See, fortunately or unfortunately, chemical exports to US is not very high. $5.7 billion, which is about 6% of our total exports to USA. And out of this 5.7 billion, probably the specialty chemicals would form a bigger chunk. And once you are in a specialty chemical industry, probably the chances of adjusting to the shock is slightly better. I'm definitely not saying that it doesn't matter whether the duty is 3% or then 25% or now 50%. Obviously, the impact is going to be really serious. But comparatively, as against the leather or gems and jewelry or textiles, here the shock would be easier to manage. But nonetheless, the shock is shock, and there is always an uncertainty. Keeping that in mind, how to maneuver this entire situation is definitely going to be a challenge. Short term, yes, there would be a problem. Medium terms or long terms, probably there could be some solutions with the help of the buyers, with the help of the government, or with the help of overall support system. Probably situation can be managed, is my immediate feeling about the chemical industry.
So you are in a very envious position. You are possibly the one industry
yes
that,
and no.
Yeah,
yes.
relatively, I would say relatively, in an envious position, not so impacted as the two previous panelists. Well, let me come to you. Agriculture is
even as a nation, probably this shock is easier to manage because the volume is low.
Yeah, absolutely. Agriculture is a real touchy topic for this country. In fact, Prime Minister in one of the rallies said, whatever happens, we'll not allow agriculture to get compromised. Jo ho jaye hum kar denge kind of stuff is what he said. Quite brave words, but what's the impact on the agriculture overall? We heard some stories about shrimp and other things, but otherwise, give us a larger picture on agriculture.
So, first of all, thank you very much for having me and for this panel discussions. So, agri per se, if you talk about the overall agri export to USA is hardly $5.8 billion, which is almost close to 11% of the total agri-export. But if you look at the overall kitty of the export to USA in that segment, it is hardly 6.7%, which is in line with the overall agri-export contribution to the overall export of India. So in that respect, it is not that significant, but if you look at it from the agri-export point of view, definitely some impact will be there. But if you look at the sectoral deployment of agri-export to the USA, this is predominantly almost close to 45% come from marine and the shrimp export. So, and there the share of that overall, the productions of shrimp is around $5 billion, out of which 2.6 to 2.5 goes to the USA. So that segment has definitely going to be affected significantly. But I have gathered the information from the industry also. So far, the impact has not been so that, because ultimately still the processors are buying from the farmers. The prices have come down of particularly lower count shrimps, which prices have come down 15-20%. But overall export in the short term, it is not going to be impacted. But as Chief Economic Advisor has already said that probably that strike will be struck, and then possibly some solution will be found out. Other industry is basically, because agri is a very large industry, there are spices, there are basmati rice also one of the segment which is, but basmati rice is also, if you look at the overall basmati export is close to $5.6 to $5.7 billion, out of which to USA it is hardly goes to around $300 million. So in that sense, it is not going to be impacted much. And this year, because of the rainfall in Punjab, the basmati rice productions is likely to be reduced to some extent.
Absolutely.
So the prices impact, as of now, it is not there. Whatever the paddy is coming in the market, still it is well above the level of last year also. And probably it is likely to be continued because the contribution of the rice in the basmati rice in the export for USA is very minuscule. Yeah. And spices, obviously some spices, because that also around $600 million. So that way some turmeric and dry ginger and black pepper also, because other countries like Vietnam and where the duties are less than 90%, and shrimp particularly because the major competitor is Ecuador. But one point is that ultimately the US, the Ecuador export contribution is hardly $1.28 billion. So in a way that it is still 50% of what India is exporting to USA. So they will have to see whether they will be able to fulfill that. And major export of Ecuador goes to China. So in that way, they will have to see whether they will be able to compensate the gap or the void which has been created because of the impact of the tariff on shrimp export to USA. In that way, it has to be seen in the longer term.
So it seems to be a mixed bag, saying some good, some bad, not big impact and things like that. But the only question is that, you're talking about a farmer who doesn't have too much of resources, and therefore the impact at the bottom of the pyramid is going to be very intense. Is that the sense that you're getting?
So farmer as such, it is not going to be impacted, as I said, except marine farmers or the fisheries farmer. That is going to be impacted because because in the current financial year, from you look at from the current calendar year, from January to June, the export has significantly increased. That is, I think 24%, 25% increase in the export to USA is there. So in that way, the growth was there as compared to the last year. So that is going to be halted now because of this. And overall trade of agri-export during this current financial, before the announcement of this tariff, this was going up. And so in that way, USA's contribution was increasing in that way. But formal by and large, because predominantly farmers are engaged in cereal farming, edible oils, pulses, those sectors are not going to be impacted much because they don't have any, hardly rest of the commodities like dairy also is not going to be impacted because hardly it contributes $200 million, so that is not going to be impacted.
So you made some very interesting points. I'm going to come back to you on something very specific on that. I'll come back to you after the second round. Elizabeth, we have 4 sector specialists here: gems and jewelry, garments, chemicals, agriculture. You have a wider view, you have a ringside view, you have a front end view. What are the other industries that you think are impacted because of this, and therefore what's going to be the impact on the overall economy?
Sure. So I think, all the sectors definitely that touched upon has really a wider impact, which we have seen. And just taking the last, point on the seafood also. So especially because there is a competition with Ukraine, and there, the tariffs are actually lower at 15% vis-a-vis India, which is going to be higher. So that is an impact. Coming to other sectors which may be also impacted, so for instance, to coin even the IT services. I think when the US tariff actually started on the entire announcements, etc., I think typically, it was always, the sectors like all the manufacturing related and, all these chemicals, textiles, gems, all these were spoken about. But IT, was thought to be resilient. But actually what had happened is in the Q4, the time when the announcement happened, we had actually seen project deferrals happening for the IT services sectors. So their revenue growth outlooks, as well as the actual revenue growth for Q4 already had started kind of tapering down. So I think that was one thing, because we always thought that, IT as a sector, would obviously, not get impacted, but because in their overall revenues, manufacturing and retail would account for almost roughly 25 to 27%. And given that kind of an impact which created because of the tariffs, they also saw project deferrals, deal closures were getting kind of delayed. So all that was happening. That's one. Second is, if we talk about auto component as a sector, again, in that it's slightly marginally unfavorable, we would say. And particularly those who are into gearboxes or transmission systems, these kind of segments, because they actually, if we see the overall auto component exports, these segments would account for almost 1/4. And that's where they are contributing to almost 40% export share that they have. So particularly players that are into the auto component space in the gearboxes or transmission systems are another one set which could get impacted.
So auto components, auto help, so those are kind of auto ancillaries are something that is likely good. The IT gives a little heart attack. Somebody's already started talking about HIRE Act. I hope it doesn't become a fire act for all of us. So we'll just keep our fingers crossed, right? So now that this problem is there, and we need to sort of manage these kind of things. So one of the things that, Chanabhai, I'll come to you. People said that, the impact of tariff is possibly one of the areas that we could look at is, it's a three-way split, like part of it, the Indian exporter absorbs, part of it, your customer, your importer there absorbs, and part of it he passes on to the customer, the end consumer, so to speak. So maybe then all of us, we are all in it together kind of a scenario. Is that something that is workable? Is that something that you're evaluating? Is that something that your buyers are talking to you? What's the scenario?
So for our industry, I mean, again, it's very product specific. One is, let's say, loose stones, loose diamonds, or loose color stones. That's very difficult because that's a component for jewelry manufacturing, and hence that you
just pass on.
Yeah, you can't pass on. But ultimately, everything goes down to jewelry manufacturing. I mean, into jewelry. Now, as far as jewelry is concerned, I think retailers are comfortable adding, say, roughly about, I would say, in the range of 10 to 15% to absorb that kind of a price difference.
That's the elbow room you have.
Right.
Okay.
As a manufacturer, maybe you can take a lower single digit for our industry.
Okay.
Let's say on a higher side, I would say 5%. That's also, I think, stretching it. I don't think we can really bear more than that. And thirdly, in terms of passing it to the consumer, one is passing so much 50%, it just goes out of the retail price point. Because our product is also, it's a discretionary price point. It's not a necessity. And hence we are competing with a lot of the other products or services or travel, other luxury products.
Oh, in terms of a generic competition.
Because out of the disposable income, you can't just increase by 50% and still expect the jewelry to sell. So that's really where we are. And I mean, it's a struggle.
It's not a choice.
With 50% or even, I would say, even at 25%, it's really, it's
essentially, it is like, it's almost like saying, we ban India on this product. No, 50% is what? I mean, you're saying, please don't come to my country kind of stuff.
Kind of.
I mean, you have absolutely no elbow room to pass it on to the customer.
We work on very
thin margins. So that's not an option at all.
Not at all.
That's not an option at all. Samir bhai, we talked about, textile. Textile buying, our customers are typically large retailers in the US. So the buying cycle is somewhere around February, March. So 25 we sort of went through. At that time, China had 145%, so we sort of walked through. So our orders were there. The orders sustained Q1, Q2 of ours. Part of it might happen on Q3 also, but it cannot extend beyond, right? So there was recently an article by Dr. Raghuram Rajan, and he said that one of the options that we could evaluate is, can we work with the counterparties in the US and to say, lobby with, the Walmart is a big guy, or somebody else, or an Amazon is a big, so can they lobby with the government and say, you need to do something about this against India, try to do something. Is there a possibility that we use the industry to lobby? Is that an option? You're on mute. You're on mute.
Okay, can you hear me? Yeah, sorry.
Yeah.
It's a very good question. See, what happens typically in the American market is all the big players today, nobody wants to touch what the administration is doing. Nobody wants to speak good or bad. They are just going with the flow.
Okay.
Nobody wants to do anything else. Second point to this discussion is the Apple garments, apparel, textiles, they have a lot of options.
Okay.
For example, China is no longer untouchable as it was post-COVID. Vietnam is a huge market where they can manufacture. Bangladesh is growing every day. Sri Lanka is growing. Pakistan and Turkey have very, very good rates of tariff. With these options open to the clients, why would they want to go lobby for us? It's business. Why would they want to do it? There is no need for them to do it. Why would they want to put their foot into it when they have the options open for them? So I don't believe that can be an option where you can use lobbying for a product. Lobbying for the country is something which we are already doing. We have signed up as a country. We have already signed up with the new lobbyists, and we are working on that. Having said that, that's the only way. Individual companies like Kmart or Walmart or anybody else and ask them to lobby is not an option which I think would really work.
So,
And also realize that the percentage which we are asking for is already very high. In the lobbying story, you have to reduce by at least 25-30% to be able to compete.
so have the buyers already started negotiating with you, saying that now you need to bring it down?
It's already on the way. We are already talking about. Most of the buyers have already started moving their sites to other countries.
Okay.
Most of the written orders are trickling requests are coming in rather than the flood of requests which should have been coming in. And the biggest problem is right now what we're facing is that there is 25% margin tariff and there is another 25% for the oil. Now 20% is an average for most of the countries. So we are negated by almost
30%.
Even if we are able to deliver say 5, 7, 8% out of our margins or everything else, we still need to request the buyers to bring up their prices by another 10-15%, which will happen for some product lines, but not all product lines. Especially the core product lines, it's very difficult to increase prices by 10% and 15%.
Okay.
So we are going to be facing this. We already have to give discounts for the smaller items because they have already placed the order, they are not going to be able to move. They are already bargaining with us to reduce margins there, which we have to do. Another option which we are looking for is right now giving them DAP options where we deliver them duty paid.
Okay.
And try to figure out a way to reduce our margins there. But there are some other options which we are trying. But going back to your question that getting big companies to lobby for us, I don't think that is going to be the...
So that's a good academic discussion to have rather than a strong business proposition, right?
Practically, why would somebody put their foot in?
Yeah, unless they're bound to us by in some way. Yeah.
It is not. They are not investing.
Yeah, absolutely not. Absolutely not. So just a question before I come to Rajan on this, to you, Shanak bhai and Samir bhai. We have signed a UK FTA, we have signed UAE FTA. Is it something that is diversification possible to diversify to different markets? Can they absorb the kind of price and the volumes that US is taking? Is that an option?
I think for us, US is roughly 50% of the global jewelry market. So no matter what, it's impossible to really, bring that.
Okay.
Yes, for surely these FTAs and, more promotion, marketing into other countries will help, but that will also take a long time. It's not gonna...
It's a slow burn.
Yeah, it's not overnight you can really move part of the business to any other country.
Okay.
I mean, China used to be one of the, the second largest jewelry market for our industry. But since COVID, that has also gone down, and we don't really see that area coming up in the very near future. So really for us...
It's not really a...
So there are countries like a lot of the Middle Eastern countries, Far East, Latin America. I think these are potential countries, potential areas where business can grow in the future, but it's going to be a slow process.
Yeah. Samir bhai, you think a diversification into UK, because when it was signed, the garment industry said, oh, this is another option for us. Do you think that's going to happen?
I absolutely agree with Mr. Parikh. It is a slow one. The UK FTA still needs to be ratified. That will happen next year.
Yeah.
We are open with Australia and UAE. UAE has yesterday just commented that they will try to increase our garment apparel business. One of the points is that they want to increase it by 100%. But what are the figures? The figures are just not there. The numbers are really not there. And even if we grow, like EU FTA is, we are pushing it very strongly. The government is pushing it so strong, and they hope to have it by next year. But still, ratification will be another 6-8 months. We don't know 9 months. So we are talking about 2027, where we can start utilizing the benefits of that FTA.
In any case, 25-26 is washed out.
Exactly, and then, as I said before, how you to penetrate into a market is not easy. Even with an FTA, it's not easy to get into a market.
Okay.
And the numbers, the sheer numbers which US runs are not there.
Yeah, so it's not a replaceable situation now. You can't take business from one customer to another. Yeah. Yeah, of course. But it's a slow burn and we'll have to work towards it.
Yes.
Yeah. So, Rajan, let me come to you. I mean, you said US is not very critical. I mean, it's not very big. You have other markets. But if you look at EU has its own non-tariff barriers. It's got REACH certification. It's got now CBAM is going to come. And therefore, now they're going to ask you a lot of other questions based on your carbon consumption and all that stuff. What's the scene in the chemical industry and how is it going to impact? I mean, can you take the business somewhere else, minimize the impact, look at new markets?
As you rightly said, EU is not the easy option because you rightly put it that there are other trade barriers like REACH, and getting a REACH certification for MSME is virtually impossible. I'm not saying it can't be done, but it is really difficult. It can't be done in 1 year or 2 years. Many times it will linger to 3 or 4 years or even 10 years.
It's also expensive.
And it is very, very expensive that each REACH registration will easily be ₹1 crore. So for MSME, it is a huge challenge. But at the same time, the developing countries like Africa could be a good market or Latin America could be a good market. In our own case, we have started working with countries like Mexico. Contrary to our belief that there is a duty on Mexican goods in the American market, I was told that for chemicals there is no duty at all. It is 0%. So we can use Mexico as a gateway. We can use Egypt as a gateway where, I mean, there are countries where there is a FTA already in place and the duty is virtually 0. But there are some countries like us, like Brazil, unfortunately, the duties are as high as India when they are trying to export it to US market. But yes, one has to really find out the countries where they can be used as a gateway to export to the US market. But apart from that, in a long run, I think to find out other markets will be a right way to address this particular situation. And the industry should be working on it. EU definitely is not easy. US, I believe there will be a sanity which will prevail in next 2 or 3 months.
Yeah. So I'll come back to you on that question again for the simple reason that, some of the customers that we spoke to, right, they said, tariff comes, tariff will go tomorrow. We don't know, something else will come tomorrow again on tariff and something of that kind. So some of the people are saying, we are evaluating that we move our manufacturing from India to, say, Jebel, right? You're local there, you're not transporting from here to here, so it's not a transshipment, it is not, the origin is not India, the origin is Jebel. So if you have to move goods from Jebel, it is easier. Put a couple of people, more than happy to find people there and things. So is that a possibility that some of the businesses will relocate to those kind of markets? And
I think that will happen if in next 2 or 3 months the situation still remains same, that there will be no alternative but to find alternate manufacturing or alternate gateway locations. Now, unfortunately, the Trump administration has already said that we are going to look very carefully about the true origin of
the origin, of course.
Yeah.
In fact, Minister Goyal was on record to say, we are not going to allow this. So we will not allow, moving something from here to UAE and then from UAE to there. So the origin of goods is something that will...
Yes, so there is only way out that you find out a partner who will do the manufacturing in that particular country. In our case, we have started looking at Egypt as one possibility. So these kind of situations will definitely arise. As you rightly said, UAE is, or Jebel Ali, or any other small states in MENA region could be one alternative, and that definitely will have to be done.
So which has got long-term implications, in terms of capacity building, investments and things like that. Abhay, let me come to you. It's a very sticking, as I said, I opened by saying that agriculture is sticky point, and it's possibly the sticking point between us and the US in the tariff game. They've said, you had their Commerce Secretary saying that, you are 140 crore people, but you can't buy one bushel of corn, right? So that's a sticking point. It's a sore point between us. Some people have started saying that, maybe we should start negotiating on agriculture, right? Is that something that, Ashok Gulati mentioned this, saying that, why should we? He's a very respected agriculture economist. He said that we should not hold on to agriculture as a point and not make it, take the country, it should be affected by agriculture. So we should start negotiating on agriculture. So there are two sides to the view. There is an economics view and there is a real view of farmers getting affected and dairy farmers. Do you think at some stage we'll have to negotiate on agriculture?
I think it can be an aspiration of the agriculture economists to allow the import of GM crop import in India, allowing import items of particularly corn and maize, corn and the soya DOC. But the problem is that the government should have that will for that, to allow import of it, because ultimately government has to see, because agriculture has always been an emotive and the very sensitive issue and politically sensitive issue, and particularly after 2000, 2001, this farmer protest, I think it's very difficult for a government to muster courage to allow, and because they have already drawn their red line that they will not going to budge, or they are not going to succumb to the pressure of the USA. Had it been so, they would have actually allowed it. Probably one thought was there, initially there was some news about it, probably they will allow some GM crops in the coastal areas and then they will process it and export it. But to monitor and to do the surveillance and monitoring of such kind of things is very difficult. So ultimately that proposal was shelved. That was the news available. I cannot authentically say about it, but probably they had thought about it. But I think going forward, I think allowing the GM, because ultimately government, once that import will be allowed, because you see the USA overall exportable export of agriculture export is almost 4 times of India's.
Absolutely.
It's close to $230 billion.
Yeah.
So, and their maize and the soya DOC industry is close to 20, 30 billion dollars. So once they will allow it, already the soybean prices are still below the MSP, because the government has reduced the import duty and the edible oil. which has already impacted the soybean prices are around, I think, 4,200, 4,300, while MSP is 4,500. So that is impacted. So I don't think because, and allowing dairy products also, which was one of the point for which the USA was telling, because Indian dairy industry is doing extremely well. If you look at it, the growth point of view, it is growing at around 6.67%. And industry size is also, and almost there are 8 crore agriculture dairy farmers are there. And average herd size is hardly 3 to 4 herd size. So I think it's very difficult because non-tariff barriers which is there in the agri sector, probably they can think of allowing it to some extent, allowing to a non-tariff barrier, they can think of diluting it to some part. But I don't see in a larger perspective, I don't think that India will allow the import of it, because once the import of agriculture, corn and agriculture other commodities will be allowed to USA, they will dominate the market here. And India has got the government is the biggest buyer of agri commodities because they are buying 45 through FCI because they have to feed 80 crore people there. So the public distribution system will be impacted. And already either USA and WTO are also raising concern about the MSPs which the government is doing it. And if suppose import is allowed into a larger extent, the prices are already suffering to many crops, many commodities, agri commodities are still, the prices are below MSP. And once that export will be allowed, the prices will be impacted and there will be dampening effect on prices.
So there are 2 counters to that, and I'll be quoting Ashok Galati in some context. He said, I mean, what are we talking about agriculture? In any case, we import oil, right? Edible oil is about 80-90% coming from outside. So that is one part of the story. So what are we talking about? We are already importing agricultural products. So what's the harm in importing corn or whatever? So that is one part of the story. The second part is one heard that, it's not that US is wanting to sell cheese. They want to sell some very high-end cheese, which is consumed by the top 0.5% of this population. I mean, it's not something that is being, distributed through Kirana stores and things like that. So is it really a sticking point when we are already importing agricultural products and US is not talking about regular cheese? So is it something that we can look at?
They can allow it, but ultimately if you see the size of it, so ultimately, as I stated to you, that the agri industry is also one of the biggest industry in India.
Absolutely.
And there are large number of dairy farmers are there. So indirectly, and the cooperative sectors is very effective in agri sector, and that is what the government is through Ministry of Cooperation. They are trying to replicate the AMOL model to other cooperative societies also, and replicate it, increase the milk and milk-related products. So if they will allow it that the imported item, the prices will be impacted. So ultimately it is going to impact the farmers, and that's why the government is very much concerned. And always, because of the politicization of all these issues, the government will not have that much of courage.
It's more the internal politics that will sort of hold our hand rather than anything else, right? So is that what he's saying?
Yes.
So may not be an issue, but as much as it is a politics that might sort of affect, right? Let me come to you, Saunak. Your industries are, concentrated in a couple of states, so Maharashtra, Gujarat, maybe a part of it is Rajasthan. To tide over this, are there some suggestions that you have to the central government, to the banking sector, and to the state government, for example? Are there something that they can do? This central government will always say, we did the direct tax activity, we did indirect tax. The RBI governor is on record to say, we will do policy action if required. If the inflation print is good, we are open to supporting growth. Kind of good, sweet voices coming across. As an exporter, as a very important sector which is affected by this, what would be your expectation from both the central government and, more importantly, the state government? It's a very concentrated area. So is there something?
So for us at
So maybe what I'll do is, we keep submitting advocacy papers. So whatever your suggestions, you can sort of include that and put it across the government. So I'll use it from that.
So we've actually already reached out to all the government authorities, whether be it central or state, including RBI and all the other authorities. So for us, the situation is, for us actually, it's similar to what the COVID times were, when the COVID really hit.
Yeah.
And some of the measures that we are expecting is, again, on a similar lines.
Okay.
Where, there was short-term support that they gave. And again, I'll split into actually different areas. One is policy, one is fiscal, and then also related to employees.
Okay.
So at the center, right from, some of the policy measures, one thing that we've reached out is for SEZ units.
Okay.
About 85% of the business is to the US.
Okay.
And that is an area which is really affected massively. And this has been one of the asks for the industry also in terms of ease of doing business to do also reverse job work.
Mm-hmm.
Because domestic industry is still doing well, relatively better for us. And if SEZ units can manufacture for the domestic.
Oh, that's interesting.
Yeah. So it's actually reverse job work. So that
Okay.
way we can still take care of the workforce that we have.
So you manufacture for an Indian customer?
Exactly.
Oh, I see. Oh.
Just do job work.
Yeah, you're outsourcing it to the US.
Yeah, temporarily,
Yeah,
so
okay.
we can tide the wave.
Okay, interesting.
Secondly, because of the cancellation of orders and things like that, the SEZ units are sitting on also excess inventory. So to allow them to sell again in the local market, of course, paying duty what they did not, that's fair, but at least allow, so that way you can take care of the overall the liquidity and the inventory issues.
But can the Indian market take that price? Is it possible?
That, yes.
Possible.
Yeah. So that I think can still, it is a doable, it is a doable thing. Secondly, from the banking side, again, our industry is a very high working capital, industry, and that's how we work on. So, and in India, we are generally, our interest costs are higher than our competition around the world. And we've been again reaching out to the government to again, roll out the interest equalization, scheme subsidy across the whole industry without a cap. So that's one of the things. One is deferral of packing credit. Mm-hmm. Because again, a lot of the, with the cancellation of orders of reduction of that, to again roll that is going to be difficult short term. So extend that by another 6 months till we have more clarity on what is happening with the,
that's
with
very
the
interesting.
tariff.
Absolutely.
Yeah. And temporarily actually inject more liquidity into the industry because people would be sitting on higher inventory levels.
So extend more credit.
More credit
on the same.
And temporarily, how they had during COVID,
a temporary overdraft.
Yeah, temporary overdraft, like 20%, you can add more and, these kind of fiscal measures. Besides that, we would expect at least the government to, we understand, none of the parties are going to be able to absorb the 50%.
Yeah.
So if some kind of subsidy or some kind of government support can be given temporarily to maybe certain percentage that the government can possibly bear or some kind of
subsidy.
Some subsidy if they can give.
Okay.
Along with it, on the employee side, we've reached out to, again, I think predominantly more state government. If they can...
Labor is a state subject.
Yes. And mainly, all of them nowadays, everybody lives on EMIs. And when their overall, take home reduces
Absolutely.
because of reduction of their package, because a lot of them are, piece rate and naturally with the production coming down, they would be earning less. So to help them maybe restructure their EMIs, possibly defer it or extend that.
Oh, that's very interesting.
Because that would really help the labor force to also manage. It's not about us managing the finance just ourselves. We have to ensure that our labor force also is equally able to do that.
Oh, that's
so that's one of the things. Secondly, if they can somehow give some kind of an education support to their family, to the kids. where maybe another 6 months, maybe the government can possibly bear or give some kind of a grant to them. And thirdly, it was also to add some kind of an additional insurance for the employees. So if any medical emergency and things like that, that will. So these are the three particularly related to the employees that we've asked the state government to.
And how has been the kind of response?
So still there's a lot of, discussion happening. I think one of the thing is, it's actually, I would say it's a tornado, what has happened. And we would really want the action or the decision to come really fast. Because by the time things get, hopefully it will get resolved very soon. But I think timely support from the government is critical.
Hand-holding.
Also, I would say one more thing. I think it's a great opportunity for us as a country to really work on ease of doing business.
Okay.
And I think a lot of these things can with the right policy and timely decision making, that can happen. There's a lot of things that they agree, but in terms of implementation, decision, implementation, execution, it takes a much longer time. So if that actually can be effectively done, I think it can change.
Use this crisis well.
And I'm just going to give, it's a very simple, maybe silly example. But whenever internationally, whether you're into any of the Western countries, it literally takes a signature to do any import and export. Here, the amount of signatures that we do, the amount of compliance that we have to go through, it's just massive. And if that can be done, and a lot of the other things, whether it's, custom-related issues of clearance, and, ours is a product that goes into a lot of valuation panel, and it just takes time, and it's such a high value, we cannot afford 1 day delay of clearance from customs.
Absolutely.
Now, where Dubai has really taken the business away from Belgium, of the whole rough trading business, is largely, of course, one is the fiscal benefit that they have, but secondly, also in terms of ease of doing business. And that is something that we've really been trying to see, that how India, being the largest or the only player into cutting and polishing of diamonds and color stones in the world, we are not able to attract the rough trading business here.
Like Antwerp used to.
Like Antwerp used to, which has now gone to Dubai. And it's very, very easy to actually get that here. It's just the right policies have to be done, and more I would say more execution in terms of speed. So I think today's time, it's a great opportunity for the government and the industry actually to work together and see what are the businesses actually eventually we can bring it here.
Yeah. So, I mean, the finance minister was recently quoted by saying, tell us what you want us and we'll do. So hopefully your voices should go to them, and maybe something will happen, right? Elizabeth, what is your ask from the government?
I think,
and maybe from RBI also.
Yeah. So I think I'll split this in two parts. That first of all, why the ask? So I think one thing is very clear, that the 50% tariff is unviable, and we heard a lot in the entire discussion as well. Two is, if we actually go to even a 20% tariff, and why I'm coining 20% is because Vietnam, Bangladesh, Thailand, all the peer countries also have 20%. Even if that would have happened, we would still have some kind of, impact that we would still have, though there would be some kind of a relief though. I think the other point is, we also spoke about diversification, which we have been speaking about, right? I think our view is, yes, we have to diversify. There are a lot of other markets, but you cannot immediately do that. And right now there is a pain point. You have to address the pain point that all industry players are facing. Gradually, yes, across all the markets, we all know our markets. We know where are the other export countries that we would kind of diversify to. Another option is, if you don't look at exports, can we do something interim for domestic, which is also what, again, we are trying to reach and trying to do. But in addition to all these steps which are still there, because a lot of things may even play out in the medium to long term, not even immediate, it becomes very imperative for a decision to be taken by the government, by the RBI, to actually help in this time. It just similarly corroborates to the situation what was there during the time of COVID also. So there, I mean, a simple thing like how do you pay your dues? So you will have to have some kind of restructuring, a one-time restructuring, etc. that came in, or any kind, and whatever shape and form this entire thing may come in will be completely dependent on what the decision is being taken by the policymakers. But end of it, some kind of the credit guarantee mechanism or the one-time restructuring which I spoke about, definitely I think will be the need of the hour to help in the immediate term the entire industries.
So do you see this as a 1991? We all keep talking about COVID in the recent memory, but do you really think that this is like a 1991 crisis which we can sort of use that opportunity to transform the country?
See, I'll put it in this way that especially the export-focused kind of sectors, which are very dominant, that's where the main impact would be. I think the era which was earlier was more on the financial crisis, etc., which also kicked in. May not be that intense, also the time that we saw during COVID, but definitely it's a dent. And I think the timing of this is the most crucial thing. Like for instance, if we simply talk about even the gems and jewelry industry, already the exports were impacted in the last 2 years. So already the industry is struggling. And then already on top of that, you're having tariffs. Same example, I mean, you talk about any other sector as well. RMG, for instance.
Yeah.
In 2024, again, there was a revenue decline. 25, it just managed to come up because of the low base. And again, there is a tariff impact. So problem is you are already in a pressure and then you get the further issue of the tariffs.
So it's a sort of double. Samir bhai, like in Shaunuk bhai's case, you're also concentrated in a couple of states, right? And one of the biggest places is Tamil Nadu. In fact, the Chief Minister had written an article in Business Standard to say what he thinks he should be doing and what he's expecting the central government to do and things like that. What would be your expectation, both from the central government and from the state government, to help you tide over this crisis?
Like Mr. Parikh said, we have, as Apparel Export Promotion Council has also been gone to the commerce ministry, the textile ministry, the government, everywhere. And as also we have been asking for some of these things for a very long time, like the interest equalization scheme, which we have been discussing since the last so many times. But the problem happening here is, they bring it stops. They bring it stops. We need long-term policies for all these things.
You need visibility.
Yes. For example, ROCTL, which we get. Now it is only up to 26 March. How do I set, we have to sell 6 months in advance. How do I set up a price line for it? So unless and until we have long-term policy measures in place like the interest scheme, the ROCTL, or any of these schemes, it is going to be very difficult for us to be able to maintain even what we have right now. Because our interest rates are at 9 to 12%. For MSME, it goes up to 11 and 12%.
True.
Okay, for big companies, it goes up to 7%, 8%. But what about smaller companies? And world has 3%, 4%. Where do we go from there? We've also requested for pushing the FTAs. The FTAs are really going to be important in the longer period of time. For the shorter period of time, we have also suggested the government for a focus market scheme category, like, for example, anybody who is affected by, say, US tariffs. Everybody who's shipping to the US will get a focused subsidy, only for the US market, not for the other market, which is not affected. But at least that should help us turn around and push the reduction in the business in that area. Another point which we have requested has been for to increase limits in ECGC, and make it more smoother, make it more friendlier for smaller companies, because we need that support of insurance, because we don't have smaller companies and MSMEs don't have access to the markets where they can buy insurance from other countries.
Yeah.
ECGC is the only way out.
Absolutely.
And ECGC should become more friendlier, more easier. As Mr. Parikh has also said, it has to be more friendly for the smaller people to make it work for them. come together and make a scheme which is viable for everybody.
Oh, that's interesting.
If I have a process house in, say, Gujarat, and I have a factory in, say, Tamil Nadu or in Maharashtra, I can still utilize the benefits from both the states and still be competitive enough to manage the game. Because, for example, Gujarat is fantastic in processing polyester. None of the other states are great in processing polyester the way Gujarat can. But Gujarat has no tough schemes, no subsidies left. 15% is the basic subsidy left. How do we solve that? We need some kind of a baseline where we can say that, okay, we will get this baseline subsidies and make it work. Because finally, for these kind of heavy investments, we need handholding from the government. Every country needed it. Every country did it. Like China, every country did handholding for the main investments.
Oh, yes, yes, absolutely.
Absolutely. So we need that. For example, another thing is that we need to change our product profile. For example, India is always known as where you go for summer garments, lighter weight garments, cotton-based garments. Predominantly, India is a cotton-based selling garment country. We need to move to more man-made fibers. To get there, we need bigger investments in man-made fiber industries. We need bigger investments for in the PLIs, where we have to start production from base. We need to create new fabrics where the export garment can be made from. But that needs the government's help. This is where we are looking for. We need to stop our dependence on one market. Yes, how do you do that? Increase your product line. To increase your product line, we need more products. To kickstart it, we have requested for like a self-ratification advance authorization scheme, where we can import base fabric and make garments value added here and then reship it out. That it is just a kickstart to be able to move faster, and by the time our infrastructure gets created. All these are necessary. Another thing, as Mr. The gentleman said, we need to have more sustainability areas where we need to focus on sustainability areas.
Absolutely.
Because Europe in 2027 is going to go ask you all sort of questions.
Correct.
Each for us is already a story which we have already with it. But they want sustainability, green factories. We need to teach MSMEs, we need to teach, because that's where the money is coming in from. How to take this ahead, how to handhold them into bringing it up.
Samir bhai, you made a very important point, and Sandeep would sort of smiling on the side. You know, from the chamber, every time we organize a conference on sustainability, and we say, you know, we are going to get experts to talk about sustainability. We have 4 people registering for the program. It's free. We don't charge, right? And we have it in the best of locations. Central part, you know, you can come. Time is, but people don't take it seriously. It's very easy to say, you know, you need to teach us on sustainability. We need to help you. As a chamber, we are more than happy to do it. But the question is, MSMEs don't want to come and say, hey, sustainability छोड़ दो. उससे सर अपने को 4 रुपए का धंधा मिलेगा क्या? आज नहीं मिलेगा यार. शायद 4 साल के बाद मिलेगा. 1 साल के बाद, you know, it will become mandatory for you to do it, right? So,
it is going to be mandatory.
Absolutely.
But it is 2027. Europe is going to ask you. We already have questions.
Absolutely.
Where is our, forget the fabric where they are buying from. Which jigging mill they are buying the fabric from.
Yeah.
And how is their sustainability values?
Yeah. So we'll all move to scope 1, scope 2, scope 3 kind of.
Yes, and we will hit the MSMEs in 2027. And if US is not going to be very far behind, even if it comes back to the business.
So we will talk offline on this to conduct a conference on sustainability for textile in Bombay Chamber.
Yes, we should.
Only condition is he brings in the MSME.
Yeah, absolutely. We'll help him with the marketing. Yeah. Yeah. Rajan, to you, 2 asks, one from, you know, from a short term, one from the long term perspective.
The ask what I'm talking is completely different, and everybody probably will not like it.
That's okay.
So my first honest question is, if we are talking about FTAs with all other countries, why not with USA? See, ultimately, you have to give something to get something. You can't expect that, yes, I will not do anything and US has to reduce the duties, they should allow a free market to us. I think the entire scenario currently, the penal duty and the basic duty, yes, I mean the basic duty, every country has a right to protect their own industry or get the revenue. Ultimately, who pays for that additional duty is their own consumers, their own nationals. So we should be really not bothered about it. I believe that the entire agreement or the tariff agreement with USA, there is a political angle and there is probably ego or emotional angle. If we allow Harley Davidson to be sold here at a lesser duty, how does it really matter? Because like cheese, there would be hardly 0.5% of the consumers. If we allow them to sell corn to us, how does it really matter? We are not a country who consumes corn. We can always use it for industrial use. Can be converted into alcohol. Anyway, we are talking about mixing alcohol into the petrol and using. So why should we really not allow that? We are anyway importing pulses. Why should we not allow that from America? We are anyway importing other agricultural products like palm oil.
Edible oil.
We do that. So what is wrong with America that they should not be selling it here? And in any case, I genuinely believe that the agricultural industry should be subjected to a competition. I mean, what happened to the industry after 91? Everybody made a long halla gulla. There was a Bombay club and they said, no, we will not survive. And today the same people who were arguing about against opening the industry, they are flourishing. Bajaj is a classic example. So if we do that in long term, our agricultural industry will definitely benefit and that should be allowed. If we do this, we keep aside the political aspect, we keep aside the ego, probably the FTA or the tariff agreement with USA will go through very easily. And today, because of these two issues, if the gem is suffering, gem industry is suffering, the textile industry is suffering, or the marine industry is suffering, everything will go. Why should these sectors suffer because of some of the sectors which are protected so heavily for the political reasons?
Yeah.
Is my honest question.
Yeah, so I forgot for a moment that Rajan also heads our Agri Committee. So he's very passionate about agriculture, farmers and things like that. So I understand where you're coming from. So you say, come what may, we should get into a
Yeah, we should bite the
FTA,
bullet. I
bite
mean,
the
the
bullet.
time has come to bite the bullet because that will make our country competitive in every aspect.
Yeah, I'll come to that question in a little while if you have time. Abhay, what is your ask from the government, one short term and one long term?
So short term, I think, because ultimately the short term, what other speaker has spoken about it, similar kind of things is required because ultimately agri-allied sectors actually, NPA norms for agri-allied sector is also 90 days. So anyway, if this particular problem lasts longer, I think it is going to affect their cash flows. And once their cash flow will be impacted, they will not be able to repay the bank loan and that will start becoming NPA. So the request would be to RBI particularly to think about this kind of situation. And as other speaker have already spoken about that the inventory positions will go up. So working capital impact will be there. So there has to be some kind of additional arrangement by like that emergency credit limit which was given during the COVID period. That kind of arrangement can be provided. Others normal measures, immediate measures will be IGST refund, immediate IGST refunds, and also the duty drawback refunds will is out
But
there.
that's not temporary.
Positions, but that's a temporary. But otherwise, in the long term, they will have to think about it, about diversification, because ultimately the government is trying to diversify to the export of agri-export for other countries also, particularly EU and China and Japan and other countries. So already free trade agreement has already been signed with the UK. So others will also fall in line. But I agree with Raje Sahab ki ultimately one day or another we'll have to allow agri sector also to open up, and particularly as he stated about the maize corn for ethanol purposes, because non-consumption use of maize can be allowed it, because ultimately if you look at it, the lot of maize is going into ethanol manufacturing,
Okay.
So that kind of things can be allowed it. As far as the other commodities are concerned, edible oil, had the USA been importing, exporting edible oil, I think India would have been the first to go and grab that opportunity, because we are almost 65 to 70% edible oil we are importing from Malaysia and Indonesia. Similarly, pulses also. But the problem is that their major production is, the agriculture production is corn, soya, DOC, meat, and the pork and all those kinds of major, and dairy also. So that is what, dairy, of course, they can think of it opening the dairy industry.
Why not dairy? I mean, the distance is such that by the time the dairy products come here, especially milk, it is not going to be economy viable.
Yeah, correct. That's correct.
Our milk production is definitely far, cost of production is much.
But the problem is that India, you have to understand the problem holistically. You see, India, the government has to strike a proper balance between the consumer and the farmers. So that is the problem, because it's a two-way sport for government also, because they cannot allow. So my request to the government that there is a frequent interventions of the government nowadays. Someday they are banning onion export, sometimes they are banning sugar export. So onion export ban, there was the price of subdued, the opportunity lost, other countries got the benefit of it. So that kind of intervention, too much of interventions. Now wheat stock limit, although it's not pertaining to this specific related to the USA, but US stock, the stock limit has been bought in the wheat. Frequently it has been bought out. So it is ultimately you cannot totally wipe out the traders. The traders are the main buyer. You see the MSP, the government procuring the total agriculture output which is procured through MSP is hardly 10%. 90% is outside the market, outside
What
the
I
MSP
hear you
system.
saying is that we need
so
stability.
The traders are
in
not
the,
sure.
Yeah.
Traders, we have to change that concept. The traders are not sure. Traders are the backbone of the Indian economy, Indian particular agriculture. So we have to think in that line. That particular notion and the thought process which we have already made up about those kind of things, that needs to be changed, and the government has to think about it in
So
the long term
essentially,
also.
what one hears is that we need stability of policies. There are some specific interventions that we need, but we need to fundamentally undergo change, look at it as a crisis. And
one thing I would like, the long-term
please.
productivity, although we are the largest producer in many commodities, we are first or second in almost milk, or whether milk, rice, or wheat, we are one first
Can
or
I just
second
come to you
position.
for a question? Yeah. So the question is, I'm just tempted. Do I have time? Just 5 minutes?
Yeah.
Last question? Yeah, okay.
Look there.
Oh, yeah. You can do pause there. I'm tempted to ask this question, right? If you look at the last 8, 10, 15 years, almost every 18 months we seem to be having a crisis. So we had the GFT, then we had demonetization, we had GST, then we had COVID, then now this. Almost every 18 odd months we seem to be having a crisis. There is suddenly one Russia-Ukraine war, and then somebody Suez Canal, somebody stopped it. We seem to be having a crisis. So possibly crisis is going to be the way of our life over the next whatever number of years that we are going to exist. What is it that we can do to become world beaters, extremely competitive? For example, today China could say, I don't want to do it, and they've been able to successfully beat off the entire tariff game into a very different thing. For India to become that, what is it that we need to do? What is it that we can do to become world class so that we don't get such shocks in the industry? Saunak, from the gems and jewelry.
I think I'm going to give a very general reply. For us, the way I look at it is, I think every challenge has given an opportunity. And that is, I think, fundamental. Anywhere, everywhere you go, I think that is what it is. It's up to us how to actually convert that into opportunities for us. I think one thing we need as a country is speed. The speed at which we can change things, or the speed at which I would say, take a decision. Like even today, after this happened, the number of interaction we've had with different government authorities has been massive. They've been very, very proactive in terms of reaching out, of understanding what our pain points are and what are the things that we can do and how do we actually convert this into opportunity. But after that, they stand still.
So the speed of doing business.
Yes. So the decision making and the changes and the execution and implementation, if we can really work on, I think we can do wonders. I think you have to adapt and face reality. That volatility has been increasing over the last 20, 25 years. Earlier it used to be maybe 10 years, 7 years, 5 years, and now, as you rightly said, 1.5 years. And that's going to continue. Nothing is going to change in this world.
Absolutely.
So how do we really adapt ourselves to those changes is the key.
Absolutely. Samir bhai, 1 minute response to that question. What is it that we can do to become globally competitive?
See, again, as I said, Parikh said it's going to be a general opinion. My thought process has always been when the going gets tough, the tough get going.
Fantastic.
We have to tighten our belts. We need to make sure that this is going to keep happening. We need to find long-term solutions. Policy decisions have to be long-term. Policy decisions have to be fast. We have to open our markets to competition. We need to take it head on. Whatever, whether it's garments, whether it is gem and jewelry, anything, agriculture, we need to go head on and try to fight it. Because if we keep on protecting, it's not happening. It's just some area which is being held back and everybody else is facing the problems for it. Yes, there are political compulsions, there are economic compulsions, but we have to find a solution out of this in a longer period of time, which is consistent. We can't keep on having one decision today, changing it after 3 months, changing it after 5 months. No, long-term, 20-year plan. Next 10 years, this is going to remain in force. Let's make it work.
Okay.
That's the only way to get out of this situation.
Your take, Rajan?
I think there has to be a cultural change. We as a country, we are too used to protection from the government or overall situation. As he said, we have to embrace the competition, and the competition will only make us more competitive, quality conscious and productive. If that happens, then we don't have to be really worried about who's imposing the tariff, what is the FTA, what is not the FTA. So I think there is no way, I mean, irrespective of the sector, we have to be ready for the competition.
Be ready for competition, become globally competitive.
Absolutely, global competition. Yes.
So, as far as the agriculture is concerned, the long-term strategy for the country for improving agriculture is basically to improve the productivity. The productivity is lower as compared to almost in all crops. Our productivity is much below than even the world average. So that way it is to be improved a lot. And I think R&D is already taking place. A lot of agriculture universities, ICR and AIRA, they are doing a lot of research and they are trying to improve that productivity, but still it is below, is much below the world average. Second point, in agriculture, they have to have the consistency in the policy, particularly your Exim
so now that's become...
So that again becomes, because ultimately every agriculture industries or traders, if they have to take the positions, because ultimately you need to take the positions also
hedging.
In anticipation what the prices levels will be there. So if there will be consistency in the policy, the long-term view will come. And that will definitely be indirectly affecting positively to the farmers.
Okay.
So in that way, it is that consistency
You need to
has
become more competitive, speed of operation. Yeah. Elizabeth, any last thoughts on this?
So I'll have a very different lens to the whole
Please,
thing. I'll not get into this argument, but under this kind of discussion. But I think I would like to touch upon this point that, as we said, any challenge has a kind of an opportunity that's there. And I'll give you an example. So this is about a company which is called Red Rabbit. I don't know if you've all heard about it. It's a US-based company. So again, there's this entrepreneur and actually he wanted to do something and what to do. So he happened to speak to one of his friends and he said that I have a problem because my kid goes to the school and they don't get tiffins. And I have to actually handle everything, prepare tiffin and everything becomes very problematic. He said that, okay, why don't I get into that business? So he went into that business of providing tiffin service in US. Now, obviously when he went into that, there was a problem also. So problem was that parents were the target audience and parents had every day different kind of, request of what kind of food needs to be there. So what they essentially did is he thought of that the product still remains the same, which is, providing lunch boxes or tiffins to the schools. But he changed the target audience from being parents to schools. So schools really don't have their don't have the choices. They will have a fixed menu that this is what you need to go ahead with. Why I'm quoting this example is because we all have our products, which is there. We'll have to find which are the new avenues that we want to go ahead with, and we'll need to be agile. And that's absolutely right that if there is a challenge, we'll be able to disclose and move towards new kind of opportunities.
Great. So, just left with 1 minute. Do you have any questions or we sort of close it? Couple of questions. Yes, a lot of hands. Seems to be a hot topic, Sandeep. Yeah. So maybe a couple of mics here and there.
Wonderful inputs. I think I have 2 points. One is global, outwardly looking, and one is inwardly looking. See, when you said, I like the word fungible or non-fungible skills. So that requires, without education, still you have skills, means focus and the kind of personality groomed that way. So it's a kind of path-breaking, now that skill of making outwardly seen diamonds or jewelry can be used for making, say, tooth implant. Same people, adjacent skills. I'm not saying multi-skilling, adjacent skill. Same skills can be used for tooth implant, maybe my stents or joints. And believe me, that costs much more than a diamond. I put that.
You're
and I
using
was
the dexterity.
shocked. So if that also can be tried with the same guys with different kind of training and
So you're talking about retraining of people to ensure
retraining in a sense, useful training, because that is more sustainable. Jewelries and all over a period of time, my next generation is not so much keen to buy jewelry. So I mean that is from my house.
Say that to Saunak.
So okay. No, so it's coming. It's only that Mr. Trump has...
India is the largest consumer of gold, by the way.
He has... gold is different thing. So he has preponed the tipping point. So we had to go out of our cushion or maybe comfort.
Point well taken.
And secondly, why we're not discussing Russia, exporting it to Russia? Everybody talks about in number of countries. Russia is a good friend.
We are buying oil, he has put 25%.
No, so we have to, that's a problem. But then there's a market available in Russia. Only point ease of doing business is learn Russian. Bombay Chamber, we should start a Russian coaching or Chinese coaching.
Yes.
And we should be going...
Hemant always has one very tangent suggestion. Anybody else in the audience? Anybody else? I think we don't have too much time, so maybe you can catch up with the speakers offline.
Okay, just one.
Just a question, please don't make suggestions.
Question is, world wants Indian consumers, right?
Yeah.
They are treating Indian consumers as special.
Absolutely.
Correct? Why don't we treat our own consumers special? Okay? World is fighting that we want a pie of the cake, right? How many industry, be it dairy? I will take one example of Apple, right? If we just have cold stored transport as essential and mandatory from Himachal to anywhere or Jammu to anywhere, now maybe 10 years before we couldn't do it, today we have all the highways. We will have the world quality Apple, everything else is in the place. Why don't we take it? Is it vested interest? Is it government? Or is it just the way we want to work? Safe food.
So that's quite a sensitive issue. I will not talk about it in the tariff context. One last question and then we sort of close off. Yeah, okay. So maybe we should do it just...
Yeah. In fact, it was really heartening to see that many suggestions were coming, whether it is diversifying or it is actually redefining entire internal mechanism of our country in terms of subsidy and all. My question to Rajan ji is, will it not be a good idea, because India is the sweetest spot as well as biggest consuming market in the world, to put a counter tariff to US based product to enter in market and make more stricter norm for US based product while deciding for FDI in India? Considering the fact that Apple has done a 70,000 crore business in India.
Yeah, good point. I think we'll take this question offline. Maybe it requires a longer discussion. And Rajan has a PhD on that subject, possibly. So, thank you so much, ladies and gentlemen. Thank you so much, Saunak bhai, Elizabeth, Rajan. Samir bhai, thank you very much. He's unwell actually, but he chose to connect from online. Thank you so much. Get well soon. Thank you so much, ladies and gentlemen. Have a good evening.
Thank you, speakers, for making this session so informative and interesting. A round of applause for our speakers, please. Now I invite Mr. Khosla on the dais to please present mementos to our speakers as our token of appreciation.
Bombay Chamber tradition is ladies first. Yeah, always.
That's why I started.
Why Bombay Chamber? We should be the last ones.
I was not going to give it to you.
Yeah, then it is perfectly fine. No, I know, but actually, yes.
Thank you, Shri, sir, moderating so well. Thank you so much. One group photo, please.
Yes, please. Thank you.
Thank you. Now I invite Shri Vishwajeet Chimankar, Deputy DGFT on the dais to please deliver the special address. A round of applause for him.
Good evening, everyone. Dignitaries and all the members of the committee. I think that was a very fruitful discussion that we were having here. And I believe the timing of this session is very nice, seeing that we have a lot of uncertainties coming up, especially due to the tariff issues that have cropped up. Especially when we have a transactional leadership at him in a very big country of USA. So the topic, which is tariff, trade and India's economic future, seems to be very fit for this session. So it becomes very important to have a discussion on such issues so as to come up with some inputs. So we believe that whenever we participate in such sessions, we get good inputs. So I could see very nice inputs. Especially one input which I would say was very nice was by Miss Elizabeth. So when she was telling that we need to diversify, yeah, that's very true. And we also believe in the same. So I've prepared a small PPT so that I could summarize the whole issues and kind of solutions of what things we can do. So I'll start with it. So a quick, review. So what changed in 2025? So as we know, a big bomb came and was dropped by US tariffs. So it imposed a steep additional tariff on many of the Indian imports, so which had hurt our exports a lot. So it was up to even 50%, though some of the sectors are left behind, but many are badly affected. Then at the same time, we also have trade talks in progress, wherein we are having negotiations with large partners, notably the EU. We have also resumed, meanwhile, the trade talks with USA, as we have been hearing in the news. Then we also had a foreign trade agreement signed with UK. We have signed a India-UK CETA, that is Comprehensive Economic and Trade Agreement with UK. Seeing that we have uncertainties in the global trade scenario, we have been working so as to have more certainty. And I believe that India-UK CETA is one step forward in bringing certainty into the trade domain, especially for the Indian exporters. So I take this opportunity to kind of highlight a little bit about the India-UK CETA. Yeah, so basically 99% of the Indian tariff lines into UK will have zero duties. the labor-intensive sectors will gain tariff-free access. So we have ambitious service commitments also, wherein there will be simplified visa procedure for the Indian professionals. Then dedicated visa quotas are there. And then the key goal is to double the bilateral trade, which is expected to reach USD $56 billion by 2030. We have tariff elimination, we have some key sectors where we can work, and we have service and mobility, trade facilitation, regulatory cooperation. So the reason for which I have brought this India-UK SETA slides into this PPT is that to focus on what we have now. So it's time that we need to focus on the opportunities that has opened up to us in this moving uncertainties, wherein we should now go forward for diversification. And taking that into consideration, our ministry had also come with the 14 priority export markets, wherein the Indian exporters can see there is huge potential which needs to be actualized by our exporters. So this was in response to the steep US tariffs that were put in place. So we believe that there are 40 priority countries which we should target now so as to kind of diversify. So I believe whenever adversity comes, it's better we diversify. We need to diversify both in terms of our products and our markets also. So I believe these 40 priority countries are the one which we should target. So it includes the UK, Japan, South Korea, Germany, France, Canada, Australia, etc. You have that list online. So at the same time, this should be seen in the context that a 50% tariff was imposed by USA on 48,000 crores of Indian exports. So that kind of hurts very badly. So in this scenario, it's better that we diversify. And then when we talk about diversification, what we think is the way forward is e-commerce. So e-commerce exports can help us a lot in diversification. That is a kind of area, focus area for our new foreign trade policy also, wherein a separate chapter was brought in so as to focus on the e-commerce. Some recent initiatives which we have taken, we also have launched Trade Connect portal. So I would request all of you to just go through the Trade Connect portal so you get a basic idea about the portal itself, where we have also trying to train the new entrepreneurs on how to export, especially in the e-commerce sector. At the same time, we have launched one e-commerce handbook also, so that good exposure comes to the budding entrepreneurs or all the enterprises who are already set up to understand more about the e-commerce. So we have this single window e-platform which links exporters to overseas market. And then we already have in place ONDC. So that though is for the domestic market, but this will give a good exposure to the domestic players so that they get ready for the e-commerce exports also. And then digital marketing and platforms are also there in place. We have also signed MOU with Amazon. So you have some benefits there. If you go and surf through the Amazon Global, you will get to know about it. Now, talking about the macroeconomic implications, we are all aware of it. We will be having the issues in trade balance and growth. Then investment flows will increase due to the India-UK SETA. And the inflation input cost, we can work on it by shifting supply chain and potential retaliatory tariffs from other markets. So what are the strategic pathways? I would like to summarize. We'll have to work on market diversification, compliance and quality upgrades, invest in green manufacturing. So I could see Mr. Raghavan talking about that sustainability doesn't have that much a focus by our exporters. I believe this is a right time to focus on sustainability, especially in the backdrop of EU working on various things such as the CBAM. So this is one area where we should work on. Digital export models, cross-border e-commerce, we should work on it so as to leverage our huge potential present there. India is nowhere near China if we take e-commerce into accounts. So that is one place where we believe our exporters should focus on. Then work on supply chain resilience, that is building multi-country sourcing and logistics network. So we also in a way talk about diversifying in this context. We need resilience, and I believe that when we talk about USA, it's like they have shaked up and they have like awoken us that yes, you need to be ready for such uncertainties. And this is a good time that our exporters diversify so that we have permanent changes in the future. Then financial hedging and partnership is one which we should work on. And last, the innovation and value addition. I believe e-commerce plays a very big role in innovation and value addition. A common question is how. So I would like to just inform or tell a little bit about e-commerce, how it works. Many of you might be knowing it already. But the benefit of e-commerce is that you get very fast feedbacks from the customers. At the same time, you get very good kind of communication and inquiries from various customers, wherein you are being told that what specific changes they need in your product. So that helps you again to diversify, to bring new products, to innovate. So that pushes you and helps you to grow into new markets also. So I would like to conclude that it's a critical moment that we need to kind of wake up to this call and work more on diversifying both the markets and our products. We have to see opportunity in this adversity. At the same time, we need to see new trade paths. The recent CETA which we have signed, the India-UK FTA Free Trade Agreement, I believe is a good kind of door for new trade routes for the Indian exporters. Then the digital age which we have in our domestic market can help us a lot. We just need to kind of actualize the huge potential of e-commerce and the SME empowerment. We need to work on it because it has been seen that when I am talking about e-commerce and diversifying, all these are the core sectors where the SMEs can benefit a lot. And that we need a coordinated action, which I believe is happening. We are in talks with various departments also, and we are also kind of working on some export promotion mission, which will be coming soon. And then we are also working on some e-commerce export hubs. And then we need skills for the future. So if we see sustainabilities which we are talking about, so green skills is kind of one spot where we need to work on. So I'd like to conclude here. So these are my sources. And this is our email ID, mumbai-dgft@nic.in. So our additional DGFT sir has conveyed his regards. He really wanted to come here to embrace the occasion. But suddenly we had a meeting wherein our Minister of State, Shri Jitin Prasad Saab, had come here in Mumbai for an official program. So he could not come. But at the same time, he has conveyed his message that DGFT is always with you. The Office of Additional DGFT Mumbai is with you. Any case you have any issues in compliance or any problems, you can always reach out to us. We have a video conference facility available on the DGFT website. You are always welcome. Thank you.
Thank you. Thank you, sir, for insightful presentation. I request Mr. Khosla to please present a memento. A round of applause. Mr. Khosla, please deliver the vote of thanks.
Thank you. I think it was a wonderful session where we got to know the concerns and some of the remedies. I have my take on it. I've been following this very, very closely right from the day the tariffs have started. And two points. One, reacting to our chairman of the Agri Committee, Mr. Raje. He says we should open it for US. The Indian government couldn't open it for Indian private sector. We all saw what happened to the farm laws and how it had to be taken back. So that I don't think is happening. Secondly, I've been speaking to a lot of people and what I've been told is in the short term, they are worried but not panicking because it is almost impossible for any country right now to build that capacity. When a year back, Bangladesh had this problem, everyone thought that if the entire thing, and it's a huge crisis which happened there, right? We all know about it. And they thought that the entire production would shift to India because Bangladesh might not be able to cater to whatever was being supplied to the US. And my brother-in-law works for one of the largest EOU in Gurgaon called Orient Craft. And they said we have no capacity. It will take us ages to build this capacity to cater to an additional one because suddenly this has come. So I don't think it is going to be very easy in the short term. Of course, long term is a separate matter altogether. Again, coming to shrimps, India is the largest exporters right now with 40% shrimp to the US from India. Second is, I think, Vietnam. Second is Indonesia, and third is Vietnam with 17 and 11%. Overnight, it is impossible for them to start catching and supplying this kind if India is not. So the only thing is, it will become more expensive for the US consumer. So I don't think, it is as problematic today, but as some of the concerns which have been raised. And as the Chief Economic Advisor has mentioned that by November there will be a solution, I think we might not even lose that 0.6% of GDP which we are thinking of right now. So with that, and I said this is just a contrary view, my view, I might be completely wrong because experts know what they're speaking about, and that's why we had called them. But thank you all once again, very interesting session. I think we'll do a follow-up of this by November and December once, we know as to what's happening or whether something is happening or we keep on paying the same. So thank you all once again for being here, and let me invite you all for some cocktail dinner. No point going home so early, there's so much of traffic with the Elphinstone bridge being closed. So if you leave late, you will reach early. So please join us, and thank you to my team here who just put this together. Thank you.